The day has finally come for crypto to be on the mainstream adoption stage at Super Bowl 56. All of the major cryptocurrency exchanges have aired their ads, and now we see the aftermath. Let's take a look at the news headlines and how these are affecting the markets, and of course the crypto price charts as we see investors leave in droves based on the data alone. So before you get too triggered and jump into the comment section, make sure you hit that like button and subscribe to the channel, bell notification icon. Let's crack on. At the beginning of most videos, I'll mention our Patreon. It's our cryptocurrency trading and investing for beginners. There's a lot of updates to learn about my portfolio, how I'm trading, what's involved in it, and of course, our long-term look at the macro environment. We've had fantastic feedback from our Patreon alone, but if you're looking to up your game as well, we also have TIA Premium, which is a full trading course. There's a lesson coming out this week on my $1 million portfolio, so check out the links in the description down below if you want to up your game in the investing space. I did make a big comment at the beginning of the video about crypto investors leaving in droves. I'm looking at the cryptocurrency charts, their altcoin against the Bitcoin value. Many altcoins have broken down, and I'll show you exactly what to look for if you are trying to assess your portfolio and whether you should be getting in or out of your positions. But first, let's look at the headlines. Obviously, Super Bowl has come and gone again for another year. Coinbase, free Bitcoin Super Bowl ad causes site to briefly crash. If you saw it, you would have just seen a QR code bouncing across your screen. That's essentially what the Coinbase ad was. FTX also made its Super Bowl debut with commercial featuring one of my favorite comedians of all time, Larry David. While ads by Bud Lightyear, TurboTax also mention cryptocurrency, we can't forget the Crypto.com ad with LeBron James talking to teenage LeBron James. Lots of crypto in this Super Bowl, but let's look at the prices as well. My macro view of cryptocurrency is long-term bullish, Bitcoin being stronger at this point in time than altcoins, which we've covered on the channel over the last few videos looking at the technical indicators for that opinion. Now, the latest data is showing a 50% drop in volumes, which will affect the pricing of Bitcoin and how easily the market moves. Just a year ago, February 13th, Bitcoin was trading around $47,000, so not too dissimilar to what we're currently at. Trading volume on centralized and decentralized exchanges taken together was nearly 62 billion. That at the time, the volume was about 8% of the market cap. On Wednesday, Feb 9th, so a few days ago now, Bitcoin changed hands at around 44K. So it's a little lower now, but 44K, putting market cap at 837 billion. So at the time, it was 840. So pretty similar on market cap because we've seen more Bitcoin come into existence. Yet the volume was just 29 billion. So it's over 50% decreased in 12 months. So basically it's 3% of the value. So the drop off for Ether is even more dramatic. A year ago, the ratio of volume to value averaged 20% every day. Now it's 4%. So the drop on ETH is more than 75% down. We can see the crypto asset trading volume to market cap ratio here. So obviously earlier in 2021, the volumes were much, much bigger. We had so much more excitement in the market compared to what we're currently seeing. All this data includes DeFi, so all the decentralized exchanges. DeFi at that time in February 2021 was 60 billion, so works out to be a little more than 2 billion per day. January total was 100 billion, or north of 3 billion per day. What does thinning volumes mean for cryptocurrency trading now and the outlook for our investments? Well, thinner markets mean that it doesn't take much to move a price as it once did. So it's something to keep in mind in case we see large institutional entrants coming into the market. Let's turn our attention to the charts, and a quick shout out to our major partners of the channel. SwiftX, best cryptocurrency exchange in Australia. Trade on low fees and also stake your crypto for interest on SwiftX, and of course Bybit as well. No KYC, international exchange, plenty of trading over there, spot trading and leveraged, and also staking as well. As for Bitcoin, we've seen the breakout, now we're seeing the pullback after this event, after the Super Bowl. We can see that volume has continued to die off as the market has fallen, which isn't such a bad sign. I'll be looking for some sort of support around previous highs and previous low at around $39,000 to $40,000 before a potential attempt at higher prices. It's what we've been looking at, what we've been calling for many weeks now, looking at this as a significant low, maybe not the all-time or the current low of this cycle, But this has been a very good low. We've looked at this moving up, some small rejections, and then the breakout, which is what we were anticipating to get over the downtrend. So that's a good sign for the slow of the bleed on Bitcoin. Now we're looking for the pullback and the push up. While we're on Bitcoin, let's take a look at the volume as I just mentioned in the previous article. So going back a year ago, January and February, you can see the volumes were way up at these levels here. Now taking a look at where we currently are, you can just eyeball that and see that we've halved in the volumes. We need the volume to come back into the market to support it, to get some lows in, and then also to break out and give us that momentum to the upside. And at the moment, we're just not seeing that come in at this point in time. Could be a little while off, which I have talked about many times. Looking at Q3 or Q4 for a potential significant low doesn't mean it has to be under these current lows of 28 or 33K, but a significant low to kickstart us again into the next leg of the bull market. The Bitcoin dominance also supports this theory that it looks like Bitcoin is starting to get more of the strength and the crypto investors not as active in altcoins at the moment. Potentially short-term trades, but buying and holding. The charts, the data is telling us that doesn't seem to be the case for the big players, the big money, the smart money. Now, the dominance is at a resistance point at the moment. So the 50% of the downtrend, that's currently at 43.5% of the total market caps. If this is to continue, sure, we should see a breakout and then some retests of higher levels, 46, 47, 48% of total market cap. Over the long run, I would expect the dominance to break down from these lows of 39%. That just means more of the money is going to flow to ETH and some other altcoins. Speaking of altcoins, I'll pick up the mood a little bit. Some of the altcoins which have been trending a little harder, a little stronger than the rest of the market are the Metaverse players. Now, that's not to say that they won't get lower prices because they are breaking down from 50%. Again, their major 50%, they were rejected at their bearish level of 50%. So they're around, for sand, $4.75. The good news for these cryptos is that they have broken their initial downtrend and are now looking to slow the bleed. Now we're seeing that in the Bitcoin value as well. So it's bounced off 50%. So this is a stronger player, but the warning signals for me, my analysis, the way I trade, is if we break down from the 50% and then start to break the next support levels on the way down. So in terms of a hodl on these altcoins and how you can use it in your own portfolios, if you start to see yours break down under their 50% levels, major lows to the major highs, and Bitcoin regain strength, we may not see the altcoin against the Bitcoin value reach those all-time highs again. So these would be great trades when they get to their lows, and then we buy them at lows and sell them at the highs. Easier said than done, but these are the signals that I look for weak altcoins at this point in time. Again, the positive for the Metaverse cryptos is they've bounced off their major 50%. Unfortunately, rejected at the bearish 50%. So you can see the down range and the 50% here. But ideally, this is the stronger one. This is the bigger one, the bigger picture that you want it to hold above. So for Mana, 5,700 Satoshis and consolidation to break to the upside. That's the Hopium. That's the positive sign I can see for these couple of Metaverse cryptos. Not the same can be said for some of the layer ones. And I'll start with Solana. People think I pick on this. It's something that was I publicly talked about buying and selling. Sold at 160, sold the rest at 130. Very late, I know that. But you can see the downtrend, and it has not been able to confidently break above and hold. It's been rejected at the underside of the previous support, and then it just didn't even make it back to the 50% level. So if we come back down and break through the $80, it's probably going to go back and test some of the previous supports. And they're all the way back at 66, at 50. And then if you want to get really bearish on it, somewhere around the 20 to 25 level. That's going to take some time. I don't think it's going to be tomorrow. But I've got the hope here. The hope for this is if we find a low coming in at around $90, break the downtrend, get above the downtrend and hold it. Then break above 50%. That's the second hope. That's the stronger hope. And then the biggest hope is above around that 170 level, which currently is the 50%. Should this market go lower, this will then need to be readjusted to meet that next level. So as we see it, it's currently at that 170 level. So that's the hope side. As for the Bitcoin value, cryptocurrency investors leaving here, something I'm posting on Twitter. So you check out the links in the description for my Twitter account. I'm talking about this, protect the Bitcoin. You can see the value of the altcoin up here against Bitcoin, and it is dropping. It is breaking these major support levels now. and it looks like it's on its way to the next support level around 170,000, maybe down to around 140,000 Satoshis. Do this across your altcoins and you will save yourself a lot of money, a lot of time, a lot of heartache, and you'll reduce your risk. This was a crypto that I was very bullish on, but as I could see the market begin to break down, this is where I got out of my positions. So I see the market break the 50%, double top came in, it was supposed to hold, hopefully held the line. It has broken down. You can see just how clean that pattern is on the breakdown at the moment. So although I can be bullish on something, I am going to get the hell out of that altcoin when it breaks down. Now, this is something that I share with the members in Patreon and Premium. Links to that are in the top of the description. That's to get an idea of longer term trading and investing so that we're not suckers buying all of these dips on the way down. Link also on the way down, the double bottom didn't really play out too well. This is looking quite weak. Link BTC has just exited the building. It is on its way now. It's about to exit the building. It's coming back down to these levels of 35,000 Satoshis. And Curve DAO has exited the building. It's broken down the lows. It's broken its 50%. I was bullish on this. It moved up. But when structure changes, we have to be open to exiting the positions. Curve on Ethereum definitely exited the building. So basically this is getting weaker against Ethereum. The dollar value can remain steady, but it's getting much weaker against Ethereum. You can see it's broken out of this major trend here. Now it has some other support levels lower down, but time will tell if it can hold its ground. I know that could be hard to hear for many new investors getting in late and you're seeing these crypto prices drop. It's not all bad news. I can promise you this as the Hopium. If you remain with the market and continue to improve your skill, you will make it at the end of the day. You have to be following what's going on, getting in for the accumulation periods, ready for the breakouts into all-time high territories. So although it's grim on the outside, the goodness lies within the down periods. And for some cryptocurrencies, they are in definite bear markets. This is where the gains are made. Don't go anywhere. Subscribe, like the video, check out the links in the top of the description for Patreon and Premium with our $1 Million portfolio lesson coming up this week. I'll see you guys at the next video. Until then, have more fun to get more done.